Well, Swiggy's IPO opens today. It's a household brand, needs no introduction in terms of what they do. The IPO targets 11,327 crore rupees through a combination of fresh issue worth 4,499 crore rupees. The IPO priced at between 371 to 390 rupees per share. We have Swiggy's MD and Group CEO, Sriharsha Majety, and Chief Financial Officer, Rahul Bothra. Gentlemen, good morning. Great to have both of you here. Thanks for joining in. Sriharsha, if I can start with you. You know, you'll have a lot of fresh capital with you. How do you plan to use it? Will it be used? Will you use it to regain some of the market share that you've lost in the food delivery business? Or will the majority of it be used on the quick commerce side? Sriharsha, can you hear me? I don't think they can hear me.
Yeah, so I can take that. Good morning to you and all your viewers.
Yes, please, Rahul, go on.
Yeah, sure. So the primary proceeds that we are raising of roughly 4,500 crores, we are earmarking a large part of it to grow our quick commerce business. As you may have seen from our filings, our quick commerce business has seen a pretty steady growth path, growing at around 122% over the last 3 years. And we do expect to increase our dark store network coverage and also our geographical city coverage, with part of the proceeds. We're also going to use it to penetrate to more number of consumers. Over the last 3 years, we have added 60% more consumers on our platform. And some part of this proceeds will also be used on the advertising and sales promotion to penetrate more on the quick commerce business. The food delivery business itself has seen pretty steady growth. We are at a mature stage of the category. And we do expect to get a lot more organic users on that platform, which means the overall spending for advertising will be limited for the food delivery business.
Sriharsha, can you hear me now?
Yes, I can.
No, that was a very helpful answer from Rahul. But I just wanted your thoughts, Sriharsha, on this, on what you plan to do, because you have lost share to Zomato in the food delivery service. They are ahead on the quick commerce side as well. What is going to be the strategy? We'll get to the numbers in just a bit in terms of how when you turn margin positive, etc. But just your thoughts on both these segments and what you plan to do.
Hi. So firstly, thank you for having us both over today. I think what you mentioned is right. I think if you look at the 10-year history of food delivery, I think the last couple of years have seen us lose some share. And I think, however, in the midst of it, we've done a lot of improvements to our strategy execution, and we're starting to feel very good about where things go from here. I think this year especially has seen us do a lot of stuff on the consumer innovation side. I think we've been really hunkering down on doing more for consumers from an affordability standpoint as well as convenience standpoint. And that is one thing that I am sure will keep us in good stead as we go into the next few years. I think while Rahul mentioned that it is a mature category, I do think that we have multi-decadal growth ahead of us. And the key for us will be to really, lock down on our strongholds and continue to do more and more in terms of affordability and unlocking new consumption occasions for our consumers. And we're really excited about how it's all coming together now.
Okay, all right. Hi, good morning, gentlemen, and thanks a lot for making life a lot simpler for us. But now welcome to the stock market. So the market will want to understand what's your vision going ahead. Talking about the food business itself, margins are sub 1%. Industry believes it should go to around 5%. Do you believe that's likely to happen? And also, if you could give us an updated market share in the food business between y'all as well as Zomato.
So yes, I think the 1% numbers are right for the last quarter that we had published, and we absolutely do think that eventually the food delivery business will get closer to the 5% mark that you talked about. We've demonstrated that over the last couple of years with operating leverage kicking in and the unit economics as well improving at a steady clip. We feel good about our chances here.
And Sriharsha, if you can put a timeline to it to get to that around 5% number.
I think in our first earning call, Prashant, you'll hear us start getting into a little bit more guidance in terms of the short term, medium term at this point.
Sure.
Yeah.
Folks, hi, good morning, and great to be speaking with you. Rahul, if you could weigh in on this, because I think no one's doubting the disruption that both you and Zomato, your peers Zomato, have kind of unleashed, and it's here to stay, right? But I think the whole question is the whole path to profitability debate, and Zomato kind of displayed that quite nicely. So now let's talk profits. In terms of the quick commerce business, when do you become contribution positive? And also at a total company level, some idea, I mean, how many quarters down the line are we when we start seeing profits at the EBITDA level and eventually at the PAT level?
Sure. Let's talk about the quick commerce business. As you said, the contribution margin is a key, KPI that we are all tracking. FY23 was a year of investment for us. We increased our network, both in terms of number of stores as well as cities. And we had a negative 23% contribution margin in that year. Now, if you look at the FY24 numbers, that margin, contribution margin shrunk to negative 6% and further down to negative 3% in Q1, in which we have given our reported results. We will give a lot more specific guidance in our first earnings call. You will understand that there is an offer document out there right now. We are restricted from sharing specific guidance, which is not part of our offer documents. So we do expect to come back in our first earnings call to give you more specific color on both the quick commerce business as well as corporate level profitability.
Maybe not a number. I get that you're constrained, not asking for a number, but some time frame. I mean, rough time frames in terms of the road to profitability. Can we get that?
Yes. Sure. See, if you look at our trajectory in the food delivery business, right? FY23 we had close to 1,000 crore EBITDA loss, and FY24 that number came down to like close to break even. And Q1 we delivered the 0.8% positive EBITDA. So platform businesses are subject to a scale. So once there's a certain traction that you get after a certain tipping point, they do generate cash, and which we have seen both in our peer numbers, both locally as well as globally. So you should expect that platform businesses, having turned the corner with the operating leverage at play, with the improved monetization as well as cost levers that we have at our disposal. There are a number of initiatives that we keep running on both the cost and revenue lines. Our operating fixed cost, has actually come down in the food delivery business by 13% over the last 2 years. So there's been a pretty good, I would say, management we have been able to do on the cost side. Revenue, our advertising business again has kicked off really nicely. Over the last couple of years, we have gained substantially both in the food delivery business and the quick commerce business. And if you take a forward view of the trajectory, we will share more specific guidance in our quarterly earnings calls.
No, absolutely. I got that. We have a bunch of other questions. We're out of time. So I hope Sriharsha and Rahul, you'll come back up with us when you guys make it to the market on the listing day, and we can talk more specific numbers. I think you won't be constrained then. Thank you very much, both of you, and good luck with the IPO. It's great speaking with both of you. Thank you. Well,